welcome you to, oh, there you go. I would like to welcome you. Hi again. My name is Leo Callejas with the Solano Hispanic Chamber of Commerce, and I would like to welcome you to this session with CalSavers that we partner with other chambers as well to be able to bring you some important information for all of you small business owners that may have employees. We have partnered with we want to thank also the Dixon Chamber, the Vacaville Chamber, the Fairfield-Suisun Chamber to help us spread the information, share this information, and help you bring this important information about CalSavers and important changes in the legislation, especially if you are a small business owner. Before I introduce you to our presenter today, Carolina, I just want to provide a few updates about the chambers or about the Solano Hispanic Chamber of Commerce. Just some information that could be important, and I ask you to please share with your network. First, I would like to make a public safety and public service announcement. But before I do that, I just want to remind everyone that we are on, I think it's called presentation mode or panelist mode, meaning you can see Carolina and myself. Maybe there are other ones in the attendee. Once we get to a point of answering questions, Carolina should be able to bring everyone to the conversation so we can have you asking questions live. But in the meantime, Carolina, let me know what you would like to do. For me, I see a chat button, I see a question and answer button, but not sure if the viewers will be able to see that information or those buttons. Are they going to be able to ask questions?
Yes. Hello and good afternoon, everyone. I'm Carolina Hernandez. I'm going to be your presenter today and the outreach coordinator from the CalSavers program. As we are going through the presentation, if you have any questions, if your preference is to type them in, there's going to be that chat box. If you hover your mouse to the bottom of your screen, you're going to see both a chat and a Q&A option there. If you type it into the Q&A, it's a little easier for us to be able to track those. If you would rather ask your question out loud, you just want to have more of a conversation about it, which is also perfect, you can either select the raise hand feature and we can unmute you, or just once we get to that period of questions and answers, we can also just unmute everyone so that you can go ahead and ask your question. But if you raise your hand, it'll also kind of help us for, depending on how many people join, kind of keep you all in order of when you ask your question and make sure that we're not talking over each other. But whatever your preference might be, you can type in your question, or we'll give you the availability to ask it out loud as well.
Well, thank you, Carolina. I asked you the question before I even introduced you, but I think it was important for people to understand how that's working. Like I said, I do have a public service announcement I would like to do first. I'm going to just share real quick. I'd like to remind you about Power Saver Rewards and Flex Alerts. If you don't know what Power Saver is, what is Power Saver Rewards? It gives you bill credits when you reduce energy use, especially like days like today that is very hot, and looks like we're going to have a week that is very hot. Unless you're up in the San Francisco area, the Bay Area, maybe even Vallejo, you may get away with that. But it's going to be very hot days coming up. During Flex Alert, they advise us to please use energy before 4 p.m. Or the most of your energy, right, before 4 p.m. after 9 p.m. to help prevent power outages. Just a reminder, the power outages disrupt lives and harm vulnerable people in communities. What is a Flex Alert? A Flex Alert is a call for Californians to voluntarily reduce energy use when there's not enough energy supply to match demand. Again, it provides the hours when Flex Alert occurs. And why do Flex Alert occurs? Is a clean and renewable energy is decreasing in the late afternoon. Well, a lot of people are demanding energy around those hours, right? People coming out of work, people having to cook dinner, people getting home, and so there's more demand during this time. And of course, during hot days, AC is running, all that. What to do when during a flex alert, before and during a flex alert, and what the recommendations are. And this is, I know, something that I practice my home as well. Before 4 p.m., pre-cool your home. And some of the recommendations that I follow or I practice is, like opening windows during the day. In the mornings, early morning. I know there's some mornings that it doesn't cool down at all, but any little breeze help. Use major appliances before 4 p.m. Cover your windows when the sun is really hot, meaning use those shutdowns. I don't know what they call the blackouts covers if you have it on your windows. Charge electric cars, etc. And then during the peak hours, 4 to 9 p.m. delay using major appliances. Set thermostat to 78 degrees or higher, turn off any usual lights, etc. And then just some of further resources that you can see about powersaverrewards.org to get to know more about those. And let me stop sharing. A couple other reminders I would like to provide is that we do have a mixer coming up on July 20. So if you enjoy our mixers, if you enjoy networking, if you like to expand your network in the Solano County area with our members and our community, feel free to join us July 20. We're going to be on Rio Vista. We start at 5:30. And for more information, feel free to drop us a message, send us a message. I'm going to put my email here in the chat section just so that you have it there. I know July 20th, this Thursday is coming up, but if you're interested, definitely let me know. We do have other workshops in Spanish coming up, mainly around business, start of business. So we'll appreciate if you spread the word about the Spanish workshop. And if you're interested in getting more information, my email is there. And last but not least, if you look into new event opportunities, more of a regional level, meaning if you have a business where you could benefit from exposure of the connecting with business owners around the state, then I would like to invite you to the 2023 California Hispanic Chamber Statewide Convention from August 16 to the 18th. They're going to be hosting that in Costa Mesa, California, and they are targeting 1,000 people to attend the convention, and obviously the majority of the attending is Hispanic and diverse business owners, corporate America, government agency representation. So if any of these target audience that is going to be attending the event is an audience that you would like to connect to for your business and expand your network, and remember, August 16 to the 18 in Costa Mesa, California. And for more information, feel free to shoot me an email to the email address that I put in there. With that said, Carolina, I would like to hand it over to you. And again, I like to, if you can please just briefly properly introduce yourself this time and share with our audience your message you want to share.
Of course, Leo. Let me just get my presentation up. I think it should be popping up on your screen shortly if it is not already.
Yeah, I can see it.
Okay, great. Thank you very much. So once again, my name is Carolina Hernandez. I'm the outreach coordinator for the CalSavers program. Thank you very much for that introduction, Leo, and thank you to all of the chambers who in collaboration helped put the word out for this presentation so that we can get this valuable information to all of your members. So as we mentioned before, if you have any questions during the presentation over any particular section that you would like a little bit more clarity or you want us to go in a little bit more detail, feel free to pop that question into that Q&A box or that chat box. If you hover your mouse to the bottom of your screen, you should see the option for both of those. So you can type them in there or you can raise your hand and we can unmute you so that you can ask your question out loud. But just to get started, Today, I'm going to be giving you a little bit of information on the new state's retirement mandate. It's not so new anymore, but it was recently expanded. So I'm going to give you an update on some legislation updates that went into effect at the beginning of the year. We're going to talk about what that means for you as an employer, but not just cover what you're required to do, but also talk about how California is working to address the retirement access gap and how you are a key figure in solving that problem by bringing access to your employees to this problem that's burdened a lot of Californians, and that is a big lag in retirement savings. So, jumping into it, let's get started first with some of the statistics of some of the financial landscape of California. So you kind of have an idea of some of the things that the legislature had in mind when they decided to create the CalSavers program and create this new employer mandate. So when we take a look at a couple of important factors like our general health and living expenses, they are both increasing. So fortunately, as Americans, we are healthier and we're living longer lives, but at the same time, the cost of everyday items are increasing. I have a couple examples on the screen of the price difference over about 20 years or so of some common items that we all purchase. So you'll see there eggs and gas that are likely most households are buying both of those products. And you can see the price change over the course of those 20 years. Now, these are national figures, and we all know that living in California, we always pay a little bit more. So those numbers for us are even higher. So when we're thinking about saving for our future and we're calculating how much we should be putting away, we need to consider both of these factors, right? There might be a longer period that we're living out our retirement years because we're living longer lives. And at the same time, everything is going up in price. And there's also the possibility that we might just reach a point where we're not able to work anymore. And though we can't predict this, we can try to plan towards it. Now, I've heard a lot, particularly from business owners who always say, you know, their business is going to be their retirement plan and that's what they're going to live off of. And for a lot of people, that's true. For a lot of people, that is not true. I think over the last couple of years, just anyone that had a business going through COVID time can definitely attest that you cannot guarantee what's going to happen in the future. So it's better to be prepared. So when we are planning out our retirement, we should be considering the amount of time that we're going to be living on our savings when we select a savings vehicle so that we can ensure that our money is growing and is keeping pace with inflation for all of these everyday expenses. Now, taking a look at some other statistics affecting most Californians, currently nearly half of us are projected to retire into economic hardship, and that's if we can retire at all. And we believe that a key driver of that fact is that before the launch of the CalSavers program and when the study was conducted, there was about 7.5 million Californians who did not have a way to save for retirement at their workplace. And we think that that figure is particularly important because research shows that when we have access to a retirement savings program at our workplace, we are 15 times more likely to be participating. And if those programs feature automatic enrollment, then our likelihood jumps up to 20 times more likely to be saving and be on a path towards retirement security. So keeping all of this in mind and just knowing that the best way to get people saving and on a path towards retirement security is through the workplace, the California legislature created a new employer mandate for those businesses who were not already sponsoring a qualified retirement plan. So as of the beginning of 2023, that mandate states that California businesses who are averaging just one employee who is age 18 years or older and isn't the owner of the business must register for CalSavers and facilitate their employees access to the program. Now, before this year, before 2023, that mandate covered businesses who were averaging at least 5 employees. But there was Assembly Bill 1126, which went into effect at the beginning of the year, and it expanded that eligibility. So what that means is that employers, if you are already sponsoring a qualified retirement a qualified retirement plan, then you are exempt from the mandate. And we do have a list of all of those eligible plans. They're going to be your pretty well-known plans, 401k plans, pension plans, IRA, simple SEP. All of those are going to be considered qualified plans. If you start a plan by your registration deadline date, they are going to be exempt as well. And for those that want a simple, free way to comply with the mandate, you can register for CalSavers and facilitate your employees' contributions into the program. So to determine business eligibility, we receive your business information from EDD. They provide us with a number of employees that you report to them for a full calendar year. We then average those numbers from January to December to determine eligibility. And if you are identified as an eligible employer, you're going to stay eligible throughout that entire year. Eligibility is not based on how many employees you have today, but how many you averaged for the previous year. Now, for your employee eligibility, we're looking at your employees with California W-2s who are age 18 or older and have either a Social Security or an ITIN. So if you employ any 1099 contractors, they're not going to count towards your average for eligibility. But if you do have, say, employees who are living outside of California but are receiving California W-2, so they're filing their taxes as a resident of California, then those are counted and included towards the average for eligibility. And this also includes any full-time, part-time, seasonal, age-2A workers that you might have as well. And also owners and officers that are reported as employees of the business to EDD are also included and counted towards the average for eligibility. So a lot of times business owners don't think that they are counted towards this average or believe that they're exempt from participating in the program because they're the owner of the business. But oftentimes if you're receiving a paycheck from the business, you're likely reporting yourself as an employee to EDD. As from your business. So we are taking you also into consideration for that average. And all employees who meet this criteria, they do need to be added to CalSavers and given the opportunity to participate. Participation is completely optional. We'll talk a little bit more about that in a few more slides. But we do also like to mention that CalSavers is not intended to replace or compete with any existing employer-sponsored plans. The goal here is really just to increase participation in the entire market, not just in CalSavers. So next, let's talk about this registration deadline. We first opened up the program back in July of 2019. When we did that, it kicked off a 3-year phase rollout of compliance deadlines, which were based on the size of businesses. Now, those have ended, so any employer who might have missed their deadline should register as soon as possible to avoid any penalties. There are penalties associated with businesses who do not comply with the mandate. Businesses who have missed their deadlines will receive enforcement notices and should register as soon as possible to avoid those penalties. So once you are back into compliance, that penalty will no longer apply, but do get in contact with us so that we can work with you to get you back on the compliance road. But with that 3-year phase rollout done, now all of our ongoing compliance deadlines are going to be for those newly eligible businesses, and they will all have a compliance deadline of December 31st of each year. So to go into a little bit more detail about that, every spring we get fresh information from EDD, which tells us how many employees were reported for the businesses the previous calendar year. And we use that to calculate the average number of employees that a business has. So if we determine that you've had at least 5 in the previous calendar year, then you're going to be determined to be subject to the mandate, and we're going to begin to send you notices both by email and paper mail, letting you know that you need to register and your registration deadline. Those businesses will have until December 31st of the current calendar year to register for the program. So we just finished analyzing last year's data, and we sent that information to our program administrator, and so we're updating those deadlines for all of the newly eligible businesses. So if for 2022, you averaged 5 or more employees, we're going to be sending you on notices, letting you know that your registration deadline is going to be the 31st of this year. So December 31st, 2023. But I did mention that last year, the legislature expanded that employer mandate to include employers with at least 1 employee. So for the meantime, businesses who are averaging 1 to 4 employees and are not offering a qualified retirement plan are welcome to join CalSavers early, but will not have a compliance deadline until December 31st, 2025. So we're giving them a little bit of time so that we're able to let them know about these changes in the legislation so that they have time to look into what their options are. And because they tend to be smaller businesses of these size, there's usually multiple people wearing one person wearing multiple hats. So to be able to give everyone enough time to find out about the details of this program, those deadlines aren't going to be assigned until 2025, but we will start letting businesses know soon about their eligibility and this requirement. I also like to mention that CalSavers is also open for individual registration. So that means that employees of non-mandated employers, so any contractors out there, self-employed individuals, they can join anytime at calsavers.com or by downloading the CalSavers app as well. So that's going to cover the background of the program, but before I move on to facilitation of the program, I just want to take a moment to see if there's any questions on eligibility. That's usually where we get the majority of our questions from our audiences. So I just want to pause here briefly to see if anybody has any questions about their particular eligibility or how that works. And I don't see any hands raised. I did take a look at the Q&A box briefly, and I did see that there's a question about the recording. And for those that we did not mention this to, we are recording this presentation, so you will also have access to it after today. I believe Leah will be sharing that information with all of the chambers so that their members can access that. But I do see one hand raised too, so I'm going to unmute you so that you can ask your question out loud.
Yes. Hello, everybody. Thank you for, first of all, for sharing this important information with all of us, especially our small business owners. My first question is, if I understand a self-employed person can apply for this program and has time until December of 2023. I believe that's what I understood. Now, can a self-employed person that has a ETIN number is able to also apply to this program, or is only with social security numbers? Thank you.
Of course, thank you very much for your question. So I believe the first part of it was if a self-employed individual can apply to register for the program. And individuals, you can register yourself as a participant. You can contribute directly from your bank account, and you can participate with an ITIN. For businesses, you must be an eligible employer to be able to participate in CalSavers. CalSavers was created as one of the solutions for that employer mandate. So that means that employers who are averaging enough employees can participate, but employers who are maybe averaging below that one employee, which happens sometimes, you might just have one employee for a part of the year and fall below the average to be eligible to participate, you're actually not allowed to register unless you are identified as an eligible employer. If you're a new business and you have employees, but we're not going to be receiving your information until next year, you can get in contact with us. We'll collect some documentation from you just showing that you have enough employees to be eligible to participate to register as a business. But individual registration does not require any of that. Individual registration, you would just give us your information, link a bank account, and then you would be able to start making contributions. One of the things that I'm going to touch on in a couple of slides is that the CalSavers accounts are portable and they belong to the individual and they do not stay with the business. So if you start saving directly into your account, say through your bank, and then you're either working for a business that is registered with CalSavers or your own business registers for CalSavers in the future, then if you start contributing through that process, they'll all go into that same account. So funds from individuals, bank, or payroll deductions, they'll always go into that same CalSavers account because it's going to be linked to your ITIN or to your social security number.
Carolina, if I may add something, and thank you, Antonio, for the question. I just want to clarify, Antonio mentioned the 2023 in December, but for the one employee is the 2025 year, right, Carolina, in December?
Yes, so the businesses who are averaging 1 to 4 employees, their registration deadline will be 2025. For businesses who are averaging 5 or more employees, it's going to be 2023. So those are going to be annual compliance deadlines. So for example, a business who might have just started up last year and they have maybe 2 employees, their deadline won't be until 2025. But we do analyze data on a yearly basis, so we just analyze year 2022. So next year around the same time, we'll be analyzing the data for 2023. So say this year, your business really ramped up and now you have 5 or 6 employees that you average for the year. Your deadline will then be reassigned to the end of that year. So only businesses who are between that 1 to 4 are going to have that compliance deadline of 2025. If at any time your business average from the previous year increases, then you're going to be subject to whatever your average was, what the corresponding deadline is, if that makes sense.
And yes, thank you. And the other thing I think we're gonna be hearing a lot of confusion, Carolina, is the self-employed piece. There's a lot of self-employed that they are set up as a sole proprietor and they don't pay themselves, right? They don't have a payroll set up. One thing that you mentioned is that the information CalSaver gets to determine eligibility is through EDD. And so if the self-employed is not doing payroll and setting up payments as an employee, then I think that's what may confuse a lot of people that may get them out of eligibility. I'm not sure if you can correct me if I'm wrong.
Yes, definitely. So we do receive our information from EDD. So businesses with employees, they file a quarterly form called a DE9/DE9C. That's their continuation page. And in there, that's going to be a wages report. It's filed quarterly. So you're informing EDD of the number of employees that you had. You're letting them know how much you paid them for that quarter. And also you're listing which employees you're paying unemployment insurance for. So that's going to be the definition that we use for employee, is anyone who's subject to unemployment insurance. So if you are filing that with EDD, then that's how we're getting that information and determining business eligibility. So if you're self-employed and you do not have an EDD account, then you wouldn't be on our radar. If you've already established that account and say you're paying yourself out as an employee, then we would eventually receive your information. Now we, again, determine eligibility on a yearly basis. So if you have been filing for the previous calendar year, then you would be on our radar this year. But if you just started your business in 2023, well, we're not going to be analyzing eligibility in 2024 because eligibility is based off of your average from January to December.
Thank you. Antonio, not sure if that helped out, or if you further clarify the self-employed piece.
Yes, it has clarified some of the doubts. Thank you, Carolina. If I have any questions, can I send you an email if I have further questions or?
Yeah, definitely. Of course, yes. I'll be sharing my information towards the end of the presentation. So if you do have any questions or if you just want to see where you currently stand, if you've already, if you have a business that you've been filing for some time now and you just want to know what stage of this you're on, if you're on our radar yet or not yet, I can let you know that information as well. We can connect after the webinar so I can collect some details from you and let you know. But if it's anyone who's just trying to get started, just know that you can always start as individual, registering yourself. And then once you get your business account set up, then you would just, those accounts would merge and contributions would just be going into that same account.
Right. All right.
But
Thank
if you
you.
don't have any, of course, thank you for your question, Antonio. So let's go ahead and move on. And if anyone has any questions about that, we'll be doing Q&A at the very end of the presentation. I just like to pause during after I cover that because I know there's typically questions on how we determine eligibility and if your business is currently required or not. So if you do have any questions later on, we can address those, or if you'd like to do it offline, we can connect after today's presentation as well. But let's get into facilitation now and what your role and responsibility are as an employer for those that are registered and participating in CalSavers. So to start, I'll go over some of the key employer features that we had in mind when we were creating the program. When the legislation originally passed in 2016, One of the first things that we did was to engage a group of stakeholders that were representing both the employer community as well as the interests of the consumers. And what we wanted to know what were the obstacles from the existing plans on the market that were making it difficult for small businesses or businesses of any size to offer retirement savings to their employees. And there were 3 particular hurdles that were reported: was the administrative burden, the fees, and the fiduciary liability. So when CalSavers was designed, we addressed all 3 of those issues. We designed the program to be as easy as possible to facilitate. There are no program fees for employers, so it's going to be no cost for employers to participate. We do collect a participation fee from our for the employees. So one that's participating, you do pay a small fee, which is what funds the CalSavers program, but businesses do not pay to register. And also, employers are not sponsoring the program, so they have no fiduciary liability. The board that I work for and all of the contractors are going to be the fiduciaries of the program. Now, what are your roles and responsibilities as the employer? First, you're going to want to make sure that you've registered by your deadline date. So that means setting up your account. You're going to be adding a roster of all of your eligible employees, and then you're going to be submitting the contributions each time that there is a payroll. Some of the things that you're not going to be responsible for include, we just talked about how there are no fees or fiduciary responsibilities for the employer. Employer contributions or matches are not going to be allowed into CalSavers accounts. Only the individual's contributions are allowed. This isn't going to be specific to CalSavers. CalSavers is an IRA program, and IRA, you can only put your own money into those accounts. Outside contributions like employer matches are unfortunately not allowed. A couple of things that employers want to make sure that they're not doing include encouraging or discouraging participation in CalSavers. You're really here to be neutral and let them decide. So don't provide any advice on how to invest their money, on taxes or things of that nature. You won't be managing their investment options. You won't be taking money out of their accounts. They're going to be contacting CalSavers for all of those needs. They'll be able to access their account online. They can call our call center. They're going to work directly with the program on the vast majority of the things that they need to accomplish. So your role here is really designed to be limited to those things that you see there on the left-hand side of the screen, so that you're not burdened with some of the administrative duties that you see there on the right-hand side of the screen. Now, this is going to be a timeline of the onboarding process. So some of you might have already received an access code from the program by now with an invitation to register. Just know that you can register anytime before your deadline date, but if you decide to register early, you're going to have 30 days to complete that process. So if you decide that you want to register at the beginning of August, your new registration deadline is going to be 30 days after that. So if you have a registration deadline of December 31st and you need a little bit more time, but you want to get started early, just know that you will have to complete that process within 30 days. So I do see some people get started and register their business early, and then they just stop doing the other steps because they think that they have until the end of the year to complete the steps. And we're going to start sending you notices that you're out of compliance if you don't wrap it up by those first 30 days. So you're welcome to register anytime before your deadline date. Just be aware that you do have to finish the remainder of the steps within 30 days. So to register, you're going to need your federal identification number as well as that unique access code from the program, as well as your California payroll tax ID. Once you register, you're going to have 30 days to add your employees into the program. Once you do that, it's going to kick off a 30-day decision period for your employees. So we're going to be contacting them. We're going to be sending them a welcome packet, letting them know what their options are, whether to do nothing and be automatically enrolled in the program, letting them know they can customize their account, change how much is going to be going in there and which investment option they're in, or also that they can opt out of the program. And opting out is going to be pretty easy. I'll go over those steps shortly. They're going to be given 30 days to decide all of those things. And after those 30 days go by is when they will enter the program, and you as the employer are going to start initiating those deductions and sending them into their CalSavers account. So that was a pretty brief explanation on how to facilitate CalSavers. if you would like to see a step-by-step registration, we do have that available on our full webinar presentations. We do weekly employer webinars just showing you this information, but in the second part of it, we kind of walk you through a step-by-step guide on how you would register, upload those employees. We share some screenshots of the portal so that you can use that as a guide when you're ready to register your business. So anyone that plans to register and you want to see that process, you're all welcome to register for the CalSavers public webinars as well. You just go to calsavers.com. So now we're going to get into some of the key features of the program. To start, as I previously mentioned, CalSavers is going to be an automatic payroll deduction IRA. So what that means is that a portion of the participant's pay is going to be deducted, and then it's going to be deposited into their own IRA account. Roth means it's after taxes, so all of the contributions will go post-tax. It's completely voluntary for the participants. We do really like to stress that. So once they are added into the program, they're given that 30-day opt-out window. Just know that if they do decide to opt out today, maybe it just isn't a good time for them to start saving, they might not have the disposable cash, they do have the option to opt back in at any time. There's no open enrollment period for CalSavers. We've designed the program to be pretty easy to understand. Employees are automatically enrolled at work. We have standard settings that they can keep, or they have the ability to customize their accounts. I'm going to detail those options a little bit later. The accounts, as I mentioned before, they're portable, so they go with them from job to job. So if they leave your company and go work for another employer, they get to save into that same CalSavers account. So it's not going to be tied to you as the employer, it's going to be tied to them individually. Also, if you're not currently eligible to register as an employer and your employees want to get started, as I mentioned, they can start by registering themselves, and then once the business is ready to sign up, contributions are going to go into that very same account. And finally, the program is low cost for savers. There are no fees for employers, and savers do pay a small fee to participate in the program, which is what funds CalSavers. Now let's talk about how these employees join the program. Once you've registered your company, you're going to add your roster of all of your eligible employees. So those are all the W-2 employees who are 18 years or older, and that's going to be regardless of the hours that they work, so full-time, part-time, per diem, everyone. Once you add them, they will be contacted by the program. So they'll receive an invitation to learn more about CalSavers, to register their account, and of course, they can choose to opt out of the program as well. Once you've added them, the clock is going to start on that 30-day window. After those 30 days are up, those that haven't opted out of the program will become auto-enrolled. And that's when you, as the employer, can begin initiating their payroll deductions and remitting them to the program. But during that 30-day decision period, employees have some choices that they can make. One of them is going to be to do nothing, and doing nothing means that they're automatically enrolled after those 30 days. So do like to stress that if they do not want to participate, they do need to take action. They can also customize their account. They can change the percentage that they're contributing or the investment option that they're in, or they can opt out of the program. And opting out is going to be a pretty easy process. After they are in the system, they can tell us that they do not want to participate in one of three ways. They could do it online, they could do it by phone, or they could do it by paper form. If they do it by either by calling our call center or going the online process, it's going to reflect shortly on your employer side, so you'll be able to see a couple of minutes after that happens that they've opted out of the program, or they can mail in a paper form. Really important here, though, you do have to first upload them into the system before they can take any action. So if we don't have a record of them, they can't make any of these changes. Sometimes when employers let their employees know that they're going to be registering for the program so that they know that these notices are coming and that they're valid, but haven't uploaded their information yet, they'll start contacting us wanting to make some of these changes. And until we have a record of them, we can't make any changes into their account. So let's go over what those standard and customized options are. For those that are going to be automatically enrolled, they're going to start off by saving 5% of their gross pay into a Roth IRA account. Now that 5% is going to increase by 1% annually to encourage additional savings until it reaches 8%. So the first year that they're participating, it's going to be 5%. The following year, it's going to bump them up to 6% and so on until it reaches 8%. The money is going to stay in a money market fund or a cash position for the first 30 days that they're participating. We do this in case anyone missed their window to opt out and wants to liquidate their account and leave the program. But after those 30 days, those funds and any additional funds are going to be invested in a target retirement fund, which is going to be an age-based portfolio. It's based on their age and their particular time horizon to retirement. Those are kind of those set it and forget it type of plans. It's the most utilized strategy for all of our participants. But let's just say that they want to customize their experience. They can recharacterize their account to a traditional IRA. So for employer purposes, the contributions will always be post-tax. We do this because then the employer does not need to include that in the employee's W-2. Since traditional IRA contributions are pre-tax, what we do is at the end of the year or at the beginning of the year, we're going to send them their tax forms that they need to be able to claim that difference once they file their taxes. But for the employer, always going to be post-tax. Participants can save anywhere between 1% and 100% of their pay, just as long as they're not exceeding the IRS yearly limit. Contribution limits for 2023, they went up a little bit from last year. They're now $6,500 for an individual. And if you are 50 or older, you qualify for what's called a catch-up contribution. You get an extra $1,000 that you can contribute into your account. So 50 and older have a maximum of $7,500 a year. And then that automatic escalation feature that I talked about, that's going to be an optional feature, and it can be turned off if they don't want it to automatically bump them up a percentage, if they want to just be more in control of when that happens. And we do have an investment menu to select from. Like I mentioned, that target retirement fund is going to be the most utilized strategy, kind of that set it and forget it, fully diversified option. But if they want to change their investment, they do have access to a core bond fund, our global equity fund. We also have an environmental, socially responsible fund, and that money market fund as well. So they do have the ability to take a more customized approach to the way that the money is going to be invested. Here's going to be a detailed list of all of the funds and all of the fees that participants pay, which fund the program. All of this information is available on the CalSavers website. So if you would like to learn more about the investments and their performance history over different time periods, all of that can be found at calsavers.com. Now, before concluding today's presentation and opening it up for Q&A, I do want to leave you with an illustration that we put together so that you can see what the potential of long-term savings is. I'm going to go over 3 scenarios here that we've put together. I feel like the visuals always resonate more with me, so I hope that they do with you as well. So in these scenarios, we're going to take 3 possible outcomes. One is someone that is investing, but they are not saving their money at all. They're kind of, say, putting their money under the mattress. The second one is going to be an individual who put their money in a bank account, a savings account like you could open up in any regular bank with a minimal return. And the third one is going to be saving in an investment vehicle similar to CalSavers. In all 3 of these scenarios, we're going to assume that our saver is earning a yearly salary of $30,000, which is what an individual that's making minimum wage in California would amount to. They're going to have about a 1% yearly increase in their pay, and they're going to start off at saving 5%. We're going to bump them up 1% every year until they reach 8%. So we're replicating here an individual who is automatically enrolled into CalSavers. So the contribution totals are going to be the same in each scenario, and we're going to start off with someone who is 25 with the goal of retiring at 65. So as you can see in this first scenario, the money was not invested in any way, so there were no earnings. This is just going to be the contributions that the individual made over that 40-year time horizon. The savers ending contribution totaled to just about $119,000. Now keep in mind that this is going to be the money that they're going to be drawing down from for the remainder of their retirement. So keep in mind when you're thinking about that final balance, how much you would need to live off of from the time that you're 65 to, I think what they project that we're going to be living to is about 80, 90 years or so. Now in the second scenario, the same amount has been contributed, but this time the saver deposited their contributions into a savings account at a bank. It earned them a 1% return. So the total contribution was the same, $119,000. but they had a little bit of growth during those 40 years. So their earnings were nearly $20,000, which brought their final total to about $139,000. Now, more money is always good, but that figure is still not great. It doesn't make me feel very comfortable to know that this is the money that I have to live off of for the remainder of my retirement life. In this final scenario, we'll again start with the same contributions. This time, though, the saver participated in a retirement plan like CalSavers. The same contribution total as the others, but with significant more growth. In this example, the account had a 5% return, which is pretty conservative. The market's return closer to 6 or 7%. The saver had over $230,000 of growth alone, which was larger than what they contributed. And here's going to be a comparison of all three of these scenarios just to really drive home the point of the difference between letting your money sit rather than putting it to work for you. Here, the difference from letting it sit and investing is over a $200,000 difference in the final balance between these scenarios. Now, if we think back to that first slide that we started off and we saw the average price change over the course of 20 years and also our lifespan, how that's increased over the last 20 years, we need to keep this in mind. A dollar that is not invested is a dollar that loses purchasing power because the items that we're buying are getting more expensive. And the final balances, we need to make sure that those final balances are going to last during the duration of our retirement years because we're also living longer lives. That's a good thing. We're healthier, living longer lives. We just need to make sure that we're putting that money into a vehicle that is going to be keeping up with inflation for all of our day-to-day expenses. Now, if you are not unsure what the right amount to contribute is for you, we do have a really cool tool on our website. It's going to be a retirement calculator. You can play around with the figures and maybe help you get to a number that you're going to be comfortable with. For some individuals, CalSavers might be their primary retirement account. For others, it might be just supplemental to other savings. So the right amount is going to be different for everyone. I encourage you to play around with this. It's pretty interesting to see how much your contributions today could be worth in the future. Here is going to be some important contact information for CalSavers. On our website, we have a good amount of information for both employers and participants. We have a host section that's there for resources just for employers. One of the cool things that we have on there, which I always recommend to employers who are planning to register, is a template. It's just information letting your employees know what CalSavers is, that the business has registered, and let them know that we're going to be contacting them so that when we do, they don't toss it and think it's just junk mail. We have a lot of just information on the program that you can download and you can share with your employees. We have a section for them as well. So if they want to just learn a little bit more about the different investment options, you can see what the performance history for all of those options are going to be on there as well. And our frequently asked questions section, I find that the majority of the questions that I get asked are answered on there. So I would recommend just hopping on there and rolling your eyes over that information that we have. We do offer educational webinars for participants, and the registration links are going to be on that website as well. We have a really great call center. We do have also dedicated lines for both employers as well as employees. We have representatives who speak English as well as Spanish, and we have access to a translation service for any other language needs as well. And finally, we have a wonderful on-site support team. So if you do have any questions after today, I'm going to provide you my email, but also that field support at calsavers.com. They work directly with employers. So if you need any help with the registration process or just want to schedule a one-on-one appointment with someone so that they can look at your account and answer any questions that you might have, we have representatives throughout California, representatives who speak English, Spanish, Mandarin, and Cantonese. And those are also the languages that we offer those public webinars in as well. But that's going to conclude the information that I have for you today. Again, as I mentioned earlier, we are recording this webinar, so you'll be able to access that link in the future. And we do also offer how-to webinars. So anyone who's looking to register and you just want to see the portion of where do I go to register my business? Where do I go in my portal to upload employees? How do I send those contributions? we share screenshots of those steps so that you're able to see where to go, how to complete these. But with that, I'm going to go ahead and wrap up my part of the presentation. Will, I'll hand it back to you in case we have any additional questions from our participants.
I don't see any hands raised yet, but just a reminder, right? Raise your hand. Oh, I see Antonio. And if you feel brave to come off mute, you can definitely use the Q&A. Go ahead, Antonio.
Yeah, yeah, I'm sorry to take be the only one making the questions here, but hopefully that will help everybody who is attending. My question to Carolina is, what happened to employee or employer or self-employed person who started their economic activity pretty late in life, like, you know, in their 40s? Can they contribute a lot more into the program so they can end up with a, you know, a better retirement package? What is your recommendation, Carolina? Thank you.
Yeah, of course. And thank you for your question again. So for individuals who started a little bit later in life, there's unfortunately, you can't exceed what the yearly limit is for these accounts. So for an IRA, the yearly maximum contribution limit is going to be $6,500 if you're in your 40s. That's why they kind of add those catch-up contributions once you reach a particular age. So 50 is going to be the age that you can start including an extra $1,000 into how much you can be saving. But remember that CalSavers is just one tool that's available for you. There's other financial products that you can also participate. So IRAs in general, you're going to have a maximum contribution limit depending on what your age is of $6,500 or $7,500. You can also participate in other financial products that don't affect that balance. So for example, some individuals might have already like a 401k through their workplace, or they're doing other financial investments through their bank or other financial institutions. So that doesn't roll over into how much you can be putting into an IRA account. So all of these different financial products will have a limit on how much you can do each year. We do have some resources available on our website. So if you go into calsavers.com and you look at the Savers tab, there's going to be some links on there that offer some help on just general savings. And if you're just looking for a little bit more guidance on where else to put your money or what else you can do, I would encourage you to take a look at that page. There's some financial coaching and planning options on there too.
All right. Thank you so much, Carolina.
Okay.
Just a reminder again, those of you that wish to ask a question, feel free to come off mute, raise your hand, or leave it on the Q&A box. Well, folks, think on a question. I do want to share a story of a recent employer we were working on recently, and they had an employee who was getting the deductions done automatically, and so definitely the employer reaching out to CalSavers to understand what were happening is help explain employees what the program is, especially something that can help the employer also put a sort of onboarding package so that the employees don't get mad, right? Because all of a sudden money is being deducted because communications probably didn't happen properly. So if you work with employers or you're an employer yourself, maybe perhaps, and you have a plan, contribution plan, and you're new, perhaps setting up some type of onboarding task or checklist to do, and having this conversation with your employee about properly removing themselves if they don't want to contribute, or understanding how what the contributions will do may help in avoiding conflict in those situations. So you wanted to share that, Carolina.
Yeah, that's a really good point. And I think there's a small misunderstanding or misconception in how much an employer can communicate to their employees, because one of the things that we mentioned is that employers want to make sure that they're not encouraging or discouraging participation, but that doesn't mean that you can't speak on the program. So what we mean by that is don't put yourself in a situation where you're acting as a fiduciary, meaning you're giving someone financial advice. So if you're telling them you should participate in CalSavers, this is good for you, you are now taking on the role of a fiduciary, which you don't want to do. That's more for a financial advisor. By telling them do not participate in CalSavers, you're doing the same thing. So don't blur that line. What you can do is that you can give them the opt-out form. So if they don't want to participate, they have that option. You can give them our phone number. You can use that template that I mentioned that helps communicate to your employees and letting them know the business has registered with CalSavers. If you get a letter in the mail or if you get an email about them, don't disregard it as spam, your trash, or whatever. This is legitimate so that you can look into it, know what your options are. But I think that a lot of employers, when we say, you know, don't encourage or discourage, they think that they can't mention it at all. But you can definitely provide them information. We do send them a welcome packet so that they have information on the program themselves. But like Leo said, if you maybe have like a time of the year where you want to go over everything that the business offers for employees, and so you want to provide information on CalSavers, we do have those representatives that can even put a presentation on for employees so that they can learn a little bit more about what it means. We find that a good amount of participants in CalSavers, it's the first time that they've ever participated in a retirement program. So putting your money into a financial vehicle that you don't know, you haven't heard of, and you've never participated is reasonably scary for some people. And just, you know, the not knowing, we don't know what we don't know. Once we're provided the information, then we can make a more educated decision on whether this is something that's good for me and whether I want to participate versus just removing yourself from it because you don't understand what that product is. So we definitely encourage share information about us, give them our website. They can register for a webinar themselves if you don't want to do like a whole business-wide one where they can learn a little bit more about CalSavers and we can answer their questions live as well.
Thank you, Carolina, for clarifying and reminding us on the fine line there about how to advise employees. I don't see anyone else having the raised hand or posing questions, so I guess we can end the conversation. I just want to thank Carolina and everyone that attended. Those of you that asked questions, Antonio, Kent, thank you for attending. And again, a reminder, right, that this is mainly to raise awareness on the options that are available for employers to offer retirement plans. It doesn't mean that CalSavers is the option that you need to go to. It's just one of the options available. And Carolina already mentioned that there are many other options you can use, either if you're an employee or an employer, to better put yourself in a better financial situation for your future. Again, thank you, Carolina. Thank you for sharing the contact information, and feel free to take a screenshot of that. We will be sending information about the recording. If not, Carolina did, if you are not part of our mailing list, Carolina did share information about her email address, my email address, of course, the contact information there, so that if you don't get the recording, you can use one of those ways to communicate to learn more. All right, thank you. Bye, everyone.
Thank you very much, Leo, and thank you to everyone who joined. And if you do have any questions in the future, please don't hesitate getting in contact with us. Have a great night, everyone.
Bye.
Thank you. Thank you for the
Take
webinar.
care. Thank you for joining. Take care.